Sandip, good morning. Thank you for joining us. We've had a good week behind us. 4% on the Nifty, 6-7% for the small and the mid cap indices. Are we likely to build on that?
Probability is high that we build on that because still the negativity prevails and the rally which has come about has taken a lot of people by surprise. And many people, investors domestically at least, resorted to what is also called loss harvesting, where they thought that since they don't want to pay tax this year, so they sold off equities in the for saving tax, capital gains tax for this year in the hope of buying them cheaper. Many of them will are now sitting on cash and markets have rallied. So I think fundamentally also if you see uh, the triple move which we have seen is very rare. Stock markets moving up, bonds moving up, i.e. bonds yield moving down, and the rupee moving up, all three happening together. I think that by itself is a good macroeconomic indicator. Now, uh, the only small risk which remains is what happens on 2nd April with regards to tariffs, because from India's perspective specifically, if only the exports, the net balance gets targeted, then the impact could be lower. But then they are talking of specific US companies being targeted because of high GST and all. So that's can take into internal policies. So how that plays out, we have to see. So that will create some near-term uncertainty, but directionally, I think things look okay.
Sandeep, hi, morning. What is it that you're making of the entire power sector right now? Demand clearly has picked up in the month of February, continues to climb in March as well. The shortages were pretty much negligible, and there is a lot of capacity addition as well, which is currently underway on the sidelines. Anything that you're liking within the power sector?
The power as a sector, in terms of if you are talking about generating companies, the utilities, tends to be a low ROE business. So if you look at the return ratios of most of these companies, they are in single digits or very low double digits in some cases, most cases single digits. So I think we cannot give them very high valuations given the uh, political risk, regulatory risk, etc., around tariffs and all also. But like you rightly said, given that relatively harsh summer is predicted, temperatures have started rising early. So near-term demand uptick is most likely, which could benefit the merchant power suppliers in the for the next few months, and companies like IEX also could benefit because of higher price trading, unit trading charges, higher number of amount of trading, etc. I think near term, it does represent a trading bet. I would say a short-term investment bet for investors.
Okay, power in a sense is charged up, but folks, you have to remember that power is not like an easy word. I mean, it looks power, but there is energy transmission, there is energy generation, there is energy distribution, there is energy financing, there is rural, there is, there is renewable, there is the traditional companies like NTPC, which are still thermal based. So when you look at power, you need to understand that what end of the power looks appealing. My sense is the demand for power generation will come back. The demand for power generation, which was low, if summers are there, demand will come back. B, states have not also signed, when I say states, discoms have also not signed a lot of PPAs. That also should pick up. Why? Because a lot of yes and no, power demand was down, so states become reluctant. Now that BJP has got more states under their wing, so to speak, at least in terms of the ruling states, that synchronization would come back. And see, when interest rates they come down, utilities they tend to do well. Very simple mathematics. So demand, macro, government commitment, bank funding, all these factors really could be at play. So if we spend a minute on power more, Sandeep, there is power generation, there is power transmission, there is power financing, there is power mechanicals, meter company, transformer company, wire company. Which end of the power is the best one to invest in?
I think the suppliers tend to be the best one because transmission expansion both in India and globally is happening at a rapid pace because a lot of the renewable additions require much more transmission investments. So I think the transmission equipment company, the transformer companies look the best placed, I would say, on a directional basis. Then you talked of the meter companies. So many of the meter companies also have been, because of the move towards smart meters, many of these companies also have been doing well. But the competitive intensity because from new players has also been increasing. But then the overall opportunity size is pretty strong. Generating companies, I'm always skeptical because the investment they do are huge. Return ratios tend to be very low. So I think at most they would present trading bets or yeah, there has been a cycle of re-rating where many of these stocks have moved up. Further re-rating looks tough for me.
Sandeep, what's the view on the entire realty pack? And we were just talking about the antique note on DLF. They're saying that the pre-sales growth is expected to be modest going forward, and that the company is focused on growth through its existing land bank with no need for new acquisition. Saying that they have strong visibility for the next few years, and it is a structural story. But in the near term, they do think that sales perhaps are going to peter down a little bit. Sandeep, your thoughts on real estate and DLF, of course, in particular?
Yeah, so real estate has had a 3-4 years of strong run. Now, I think from all data which has been coming about, and that's what I also talked of for the last 3-4 months, that sales seem to be petering down. Pre-sales also are moderating. The price increases which these companies were able to do, that is no longer happening. So I think there has to be a phase of consolidation in the real estate sector because if you see, real estate demand stood up when many of the other sectors actually saw a decline in demand. So I think there's only so much of high-priced real estate which can be sold uh, in a macroeconomic scenario where the growth is not actually very aggressive and people's incomes are not rising very rapidly. I would think that real estate for this year, I would still see should be a phase of consolidation overall rather than significant upside in most of these real estate companies, including DLF.
Okay. If real estate slows down and if DLF is the largest company, then impact on other real estate stocks could be there. So there could be a rub-off effect which clearly would be there. But the story for me today, I think, is that we are starting gap up on the Nifty. And this entire FOMO crowd which said अरे ये क्या हो गया, market कैसे बढ़ गया, हमको तो लग रहा था market खराब है, bear market has started. This whole proponents of the word bear market, they've got eggs on their faces now. And I'm saying this with a lot of respect and with a lot of sincerity. I'm not trying to call out that who got it wrong, who got it right. But typically when you see this kind of an comeback when it comes, and when this comeback comes because of short covering, it comes at a time when macros, they are turning favorable for you. They're coming at a time when suddenly FI, selling becomes FI, buying. It tends to make you repent your cash call, or it will force you to come back in. So I think what we've seen is the first leg of the rally, which is short covering. Now comes the long part. And Sandeep, we've discussed it in your first comments. But I want to take this point forward and say that markets are a cycle. Extreme pessimism, markets will go up, nobody will believe it. Then comes the participation phase, and then comes the overbought phase. Are we now entering what could be called as the participation phase, and the market, before it peaks out, it has to go to overbought positions? And that could be 1,000 point on the Nifty, that could be 1,500 point on the Nifty, that could be 500 point on the Nifty also.
Yeah, the participation will come back, and I think so many people were expecting that domestic investors into mutual funds will suddenly stop investing. They'll have net and outflows, and a lot of people were making their bets on that. that FIIs are selling, domestic investors overall will start selling and markets will crash. I don't think that's going to happen. I think equity investing through the SIP route is now a trend sort of among young professionals, etc., at least, and that is not going to stop. So I think it's a part of asset allocation. Many of these people don't look at their values every day, which people think they do. Actually, they don't. So I think domestic, so the flows on a net basis could vary. Last year, few very good months, we saw 45,000 crores of net inflows into mutual funds also. So maybe that comes down to 25,000 crores for a couple of months, but still that's a net inflow. On top of that, if due to improved macroeconomics, better valuations, foreign investors start allocating back to emerging markets, including India. So that's the added thing which will happen. So all new moves in the market start as short covering rallies. So people always think it's a short covering rally. It'll go up, then it'll come back again. Now the jury is still out whether that will happen. I would think that I would not be negative directionally. So maybe markets move up 2-3,000 points, then obviously they'll have to give up some of their gains because that's how the markets move. They move up, then some gains are given up, and then they move up further. So I would think we will start that kind of cycle rather than this being just a short covering rally and then markets again crashing.
The one pack which also held out last week and of course led by BEL was the entire defense pack. Now remember, the DSC has approved guidelines for faster procurements. And, you know, while it doesn't really talk about any specific guidelines, the assumption on the street is that over the next 12 to 24 months, the approvals should result in order inflow opportunities for various companies across the spectrum. Sandeep, is the best play BEL, or would you say that you can diversify and broaden your portfolio within defense?
Depending on valuation of individual companies, one can. Uh, So the only defense stock we actually own right now is BEL only because that has a more established track record. They have reported very strong earnings and order wins also. And they are into project cycle which are, let's say, not as long term as a shipbuilding company or a company like HAL where the deliveries could be over many years. But if the government proceeds on order announcements and uh, actually placing orders at the same pace at which they have started to go, then I think across the board there could be opportunities.
Sandeep, merit in aligning with what I just flagged off, that भी tariff लगाओगे तो cost तो अमेरिका में बढ़ेगा, इंडिया में कम बढ़ेगा. It will hurt Americans more rather than Indians.
That's true. So that's true of actually most tariffs. Any tariff that which the Indian government also imposes, actually the consumers pay for it. So similarly, any tariff which the US is imposing, largely the consumers in the US are going to pay for it. But for some of the decisions, the logic doesn't work as well. So let's see how the overall tariff picture plays out. Because from the Indian context, if they have to impose tariffs on the net balance of trade surplus which India has, I think 3-4 sectors dominate that surplus. Pharmaceuticals, some metal and capital goods, gems and jewelry, textile. So I think these are the majority sectors. So how they proceed on this, we need to see, because we might have the logic that it's going to hurt them, but every tariff which is imposed actually hurts the consumers more.
You've always liked the infra construction space. What about NCC? Quite a few orders coming their way, and just recently they've got that LOI for a project as sizable as 1,480 crore rupees for Bihar Medical Services Corp.
In the construction space, NCC remains one of the better companies given the work they have done on reducing leverage on the balance sheet, taking projects on a EPC basis only and not going into BOT, HAM kind of models where capital requirement is there. So last 1 year, most of these construction slash capital good companies have suffered. One, because the stocks ran up too much too fast. Secondly, execution and order flows got impacted because of various elections, etc., reduced allocations by governments. And a lot of these things could actually come back next year. So I would think that the sector overall looks cheap now. And I think NCC is among the better companies in the space.
Sandeep, if you've endured the pain, now it's time to benefit from the gain. That's my limited point. Don't be in a hurry. अरे 100 रुपए का 80 हो गया, 80 का 75 हो गया, 75 का वापस 90 हो गया, बेच दो. Don't do that.
Yeah, so what will happen is that people see things moved up, then they regret that we didn't sell at the top, then markets fall, and at the right bottom, many people feel the urge to sell. And then as the market bounces back, they see how much it's recovered from the bottom and they want to continuously sell. So I think this is a psychology. Very tough to change the psychology actually across the board. But as someone who would look at more the macroeconomic and positioning as well as the psychological positioning of the market, I would think that people should not be in a hurry to sell across the board. Like obviously, if you've got some junk stocks or the companies which are not going to do well, because the overall market has fallen, you could actually exit the stocks which you just bought and you didn't know why you have bought them, and shift to others where you are more confident.
Now, one expensive stock is Warren Beverages. I mean, I don't know how much impact will happen because Warren Beverages also gets business from Tropicana and they get a lot of business from other areas also. But just a side kind of a stock, Campo-Cola getting 10% market share in some states, which means that we are in for a cola war this summer. Negative news for Warren Beverages. Sandeep, these days it's fashionable that when Birlas have moved into the wire business, KI Industries and Polycorp have cracked. Then Adani's are saying that if people move into wire business, those stocks have corrected again. I mean, Varun Beverages, where is that stock headed? It's expensive and there's competition in the cola market.
Yeah, it's an expensive stock for sure at the current valuations. But I think if some new company comes in, they take away 10% market share, obviously the market is not growing at 10%. So in the near term, your volume growth gets impacted. So that could play out on the valuations of Varun Beverages. But on the flip side, like no one actually drinks Campa-Cola. So you need to take a decision based on that.
What about the other other pocket where stocks got smoked first because of Birla and then announcement by Adani that they'll move into the wire business? I'm talking about the KI, Polycabs and the Havels of the world. Everybody now wants to aim at that 90,000 crore market because P multiples are high. So go for it. I mean, that is what builders are saying. That is what Adanis are saying.
Yeah, pure wire companies should never have got these kind of valuations at which they were trading. Like for a wire company, you can't give them a 35, 40, 50 PE ratio. I think it's absurd. So I think that valuation correction is happening. Now, wires and cables is also a big market. So, and new players will come in maybe after 2 years. Some absorption of the new players could happen. But I think it's more a valuation correction thing. And companies which have dominant business from wires and cables like Polycab and KEI, RR cables, etc. So I think those get most impacted. Cables would be more diversified with some positives coming from rest of the durables growth. AC growth is expected to be strong. But on wires and cables, obviously, they will also get impacted. So there's less impact on them, but greater impact on the other companies. More in terms of valuation derating rather than their earnings being disrupted immediately, at least for the next 2 years, it won't happen.
Sandeep, we were discussing Manappuram after the Bain deal. Would you still be looking to add afresh or rather add more and buy afresh to Manappuram at all?
Manappuram we own, so from lower level. So when a stock goes to 52-week high, I'm not inclined to buy that. But I would think that it's a good deal, both from Bain, where they get in at valuations which are not very high, and from Manappuram, where they get around 4,500 crores into the company, so which takes care of any issues which they were facing with the microfinance subsidiary, and it gives them growth capital to grow their core business and other diversification, which they also have done. So I would think that the stock should do well. I would think that the stock should do well over the next couple of years.
But Sandeep, autos, we were chatting about this earlier as well with Kunal, Tata Motors, M&M also is easing off a little bit. Time to buy these dips in auto, or would you say stay a little away till April 2nd till you have clarity on which way the tariff policy is going to head?
I think other than the sentimental impact, most of the Indian auto companies don't get impacted by the tariff policy much. So I think it's more about how the demand pans out next year. I would think that the demand outlook for next year for auto should be positive given the tax breaks given in the budget, interest rates moving down and liquidity improving, as well as better sentiments on the rural side at least. The urban sentiments still are subdued, but urban demand is also very credit driven. So if interest rates come down by, let's say, 0.5 to 1%, it has a direct impact on demand. So I would think it's positive. Outlook should be positive. The bigger fall has been in two-wheelers. So I think right now, from pure valuation perspective, the two-wheeler stocks look better placed. But directionally, obviously, we own M&M and also Maruti. So I would be directionally positive long term on those stocks also.
Very positive on M&M and Maruti for the long term. On that note, thank you so much, Sandip, for joining us on the show to give us your take on the markets and which sectors and the stocks are looking attractive at this point in time. Yes.
If you like this video, then like, share and subscribe to ET Now.